Welcome to Digital Asset News. Take the top stories in cryptocurrency, digital assets, and break them down to bite-sized pieces. So today we're not going to do the news. News is all over the place. We've already done one earlier today. We talked about the Tether lawsuit. But I want to talk to you today about, there was a comment that was brought forth, and I thought it was an interesting prospect, and we'll just take a look at that right now. And this was from Dumb Crypto. Dumb Crypto says, hey, this guy said he never sells bags, and he sold. Yeah, for tax purposes, but you sold. Said he's not a trader, but he set up a whole segment that has to deal with trading, and recently started shilling Voyager down all of our followers' throats. You're a good guy and do good in the space, and you seem to do best when it's just you trusting yourself disappointed. So I will just say this, sorry to disappoint, but it is one of those things where, first of all, you really have to grow and do more things. And then second of all, it's really about what your beliefs are. So the first part here, when he talks about this guy sold. I had sold all my XRP. And the reason why I did it was because for tax loss harvesting. If you don't know, there's this thing called wash trading. Wash trading is a very ugly word in traditional markets, but in cryptocurrency, it doesn't matter. It doesn't exist because cryptocurrency is property. It is not a security yet. So with this one, I hold XRP all the way back when it was like 275, 285, and I wrote it all the way down to like 20 cents. And at the end of the year, I was having I needed some pretty much big tax losses because of different businesses that I own. And that's just one of those things. So the best way to do that was to do essentially wash trading with cryptocurrency, where I sold everything at 9 a.m., all of it. And I sold it for like 24 cents. And then at 9:20 or 9:15 or whatever it was, I bought it all right back. And it went from it dropped like a penny, so I made like a really great trade for me. So anyhow, so what happens is I got all those losses. So imagine going from tens of thousands of XRP at 285 to 20 cents and just taking those losses, then buying right back and having the same amount of tokens. That's why I did it. So I don't understand the whole prospect here. I mean, it's a business, and don't get married to anything. So that's just how I saw it. Anyhow, he said he's not a trader, but he set up a whole segment on trading. Here's the thing: I get bored. And I want to branch out and do new things. In 2017, I branched out into cryptocurrency, digital assets. My friends thought I was crazy because they said that's going to go to zero. And here we are. So it's just one of those things where I want to branch out and do other things. And also, what he's referring to actually is the little segment that we do. It's called Trinity Trading, where we take 3 different aspects. We take technical analysis, which, charts and graphs and stuff like that, sure. That's all CJ right there. We do sentiment analysis. That's Weston right there from Trade the Chain. And then we do fundamental analysis, where me, a guy in the street, just kind of looks at things and go, okay, this is what the project's all about. This is what's going on in the news. These are the partnerships, and we just put them all together. And it works out pretty well. So far we've done 2 trades, been pretty profitable. The third one it was synthetics yesterday. I see no reason why that's not going to be profitable, and it works out pretty well. And you have to understand, sentiment analysis, it's pretty new, but with Trade the Chain, they crawl all the websites and the blogs and the exchanges. They're also one of 4 cryptocurrency companies that has a direct API into Twitter, so they disseminate billions of tweets to give us a sentiment analysis, and that's what drives the whole thing. It goes Weston first, CJ second, me third. It works out pretty well. And you have to understand, for trading, I didn't just say, hey, you over there, put that mop down and then show us some TA. So CJ, he's actually from Market Rebellion. And Market Rebellion, if you don't know, it was started by John and Pete Najarian. These are the guys who were on CNBC. They've been doing this for decades. It's not like just something that they pick up. John here, let me scroll up here. John, he was a CBOE trader for decades, also a Chicago Bears linebacker. Great, good for him. And then he's been there for 25 years. 1990, he found Mercury Trading. I sold this 2004 to Citadel. Him and his brother started Option Monster, which they sold to E-Trade for $750 million in 2016. So when I get people on the show, they're just not people that I'm just like, hey, you know what you're doing? I try to pick the best high caliber people I can possibly find to bring to you. So that is why we do these things. And that is the second reason. And then the third reason, where he talks about, you're jamming Voyager down people's throats. Yes, that is very true. But here's a nice little graph over the last 30 days And this is Voyager token, and it's gone up 400%. So you're welcome. And I mean, for this one, look, you can call me a shill all day long. That's fine. To me, there's always like two kinds of shills. There's the dirty shill who's like, you know, picks up the phone and says, hey, we want you to shill tomato coin. Great, I don't know what that is. I don't invest in it or believe it, but I'll tell everybody that I know, and then you know, leave them holding the bags. And the other shill, if you look at the definition, is really just a person who just sells or talks about these different projects. And this is one of those things. Voyager, I invest into, so I talk to you about it. Bitcoin, I invest into that, so I talk to you about it. Ethereum, I invest. It's the same thing. So like with Voyager, I'm going to show you why I've been talking about Voyager for so much. So let's just jump in, shall we? So here we go. Let me switch over to this little piece here. And this is what I want to show you. This was called token value investing. And this is from Pat Ackerman. Pat Ackerman, I'm going to link him in the description below. He's got a nice little Twitter following, and he's more like a statistician, really good with numbers and math. Math is hard for me, math. So this was a pretty good piece of information that he shared with me and everybody else. So what is this all about? And I like this because he starts off with a great paragraph, which is this: people drawing lines on charts. Sorry, CJ. So he's like, in everything out there in YouTube, when I got in, it was all, you've got to know TA, and you've got to trade, and you got to leverage, or else you're not going to make any money in this business, or in crypto. And I'm like, I guess. And then I tried it, and it just was a disaster. So then I learned about investing, and it worked out pretty well so far. I think it should do okay. But he's talking about, look, when you go out there, it's just people drawing lines on charts, and that's all they're doing, not looking at anything else. Too many investors are investing without understanding what they own and why it has value. Everything gets pumped, right? So the next piece here is, what is a token's fundamental value? So to understand the fundamental value of any token or crypto, it's best calculated using Metcalfe's law. And I'm not going to get too technical with this, but it's pretty simple, really, to break it down. A token's price is a representation of the network users that have been built, and really just comes down to, well, I'll read this part. Facebook's user growth was a spot-on predictor of its revenue. The more people you have in, the more people that are using it, the higher your revenue, the higher your value, right? Metcalfe's law can be seen with Apple, Google, and others. Their revenues are a predictable function of the network of people using their devices or services. So I'm going to break this down as best I possibly can. So let me jump back here right quick. And let's go here. And then what I want to do is bring this little piece up right here. This right here is Mr. Metcalfe. He's a genius. He was the one that invented Metcalfe's law. He's the one that invented Ethernet. He's the one that, the reason why you're seeing me is because of this guy. And it was an interesting talk that he had. And he's a pretty funny guy, actually. And so he talks about, he brings this up, this little chart, where he's talking about the users that Facebook has is directly proportional to its revenue. And he's got this nice little picture here, which sucked because I couldn't really bring it, so I had to hunt this picture down. And this is what he showed. And basically right here, this red line right here is the monthly, or MAU, or monthly active users of Facebook. And you can see as it went up from Zippo to 2004, it went exponentially higher across a threshold as more people began to use it as far as billions go. I don't know how many people are using it now, but I'm sure it's a boatload. It's a lot more than 2015. And they made a ton of money off us, let's just be honest. So that is that. But here's the thing. You have to understand that, first of all, I'm old. And I remember things. And what I remember is when Facebook came out, I was like, this is stupid. But then everybody started to use it, so I got onto it, right? And it came out in 2004, 2005, 2006, not really much in there, but right? But then you see in 7, 8, 9, 10, and it just went up exponentially. What happened? Well, it started to get a lot of people started to like it, it had good function, good utility, and then what happened? The more people used it, the more the revenue went up. But what really happened right here in 2007? I'm going to show you exactly what happened. Facebook ads. They had enough people and enough eyeballs, and once you have that, you can start to sell revenue, and then before you know it, boom, off to the races you go. So then you have advertisers there, there's more people, it's a match made in heaven. So we're talking about the same thing as far as like with cryptocurrency digital assets. What am I talking about? So let me just jump back real quick. we'll go back to this piece. So think of it this way. Bitcoin, same properties, right? The more people that you have, the higher the number goes. And of course, being finite, it also helps a lot. So if you want to take a look at users, you look at Bitcoin wallets. And this was a little graph put together by Kane Island. And they said the more Bitcoin wallets there are could be equal to the amount of people that are actually using Bitcoin. Debatable, sure. But the more wallets you have, the more that is stored there, the more is the functionality, sure. And you just take a nice little graph, 2010, the more wallets that were created, the higher the revenue went. Sounds good. Still sticking with Metcalfe's law. So here's the big thing. Tokens utility and supply. For security and utility tokens, what token allows you to do utility and the overall supply of the tokens do matter in price, right? Let me say that again. The overall supply and what the token does determines the price. Here's an example. I use Tomato Coin for all types of nonsense out there. I just say Tomato Coin, right? So let's say you have 1 trillion Tomato Coins, right? That's bad, it's way too much. And then second of all, what does Tomato Coin do? Well, it tokenizes marinara and puts tomorrow's marinara sauce on today's blockchain. It's worthless, right? There's absolutely nothing. So two bad things. Way too much of a supply, and it does absolutely nothing. Let's take a look at Binance Coin. Why did Binance Coin go through the roof, and why did I miss it? Well, because Rob's not too smart sometimes. So let's take a look. Let me jump back. And I would like to show you this. Binance Coin. First of all, it had a ton of users. That's great. Second of all, it's only got about, I think 200 million or so. It'll be in our bit. But the big thing is functionality and utility. What does it do? Well, with Binance Token, this is what I didn't understand. You can, well, of course you can store it, who cares? But you can pay via Xbox, you can pay your credit cards, you can pay in B2B at merchants, you can buy a smartphone, you can pay, you can use it here. It's also great for fees. And then of course, when you, the more that you have, the lower your fees are, and it actually is like a rewards program. I'm not sure if it does staking, because I don't have Binance, but someone tell me in the comments below. The more utility you have, the more you want to use it. So think about the coin that you're talking about right now. Does it have utility? Is it actually being used? That's the big question, as opposed to Tomato Coin. Great. Let's take a look at Voyager. So here's the thing with Voyager. This is the new loyalty program. This will be tweaked and changed, but this is what they have so far. And the new one's going to come out. Can't wait till Steve tells me what the heck it is. And this is what we got. So again, utility, how great is that? First of all, I use Voyager all the time. I buy a ton of my cryptocurrency on there. So this would be great for me. Level up rewards. If I have 25 Voyager tokens, I get BIPs 1.5. It's like cashback. 3 and 4.5 depending on how much tokens I have. When they roll out the debit card, it's $5 per month or free as I go up. The bonus rewards, this is pretty big. $10 for 25, up to 30 if you have Voyager, and so on and so forth. You can do a bunch of things. And interest booster, I think this is even bigger for everybody, because when you put your tokens on Voyager, just like Celsius, you gain yield. So if I can get 0.5%, sure, but wouldn't I like 1.5% boost? Like if I'm holding USDC at 8.5% or 9%, and I can go up to another 1.5 at 10.5, I probably want that. That's a nice utility. Not too shabby. Okay, so let's jump back to that piece of that article. So, Tomato Coin versus BNB versus Voyager. Makes sense, right? Having a low supply, token efficiency. This is where it gets interesting. Is the slope of the relationship between user growth and token price. Don't have to think about that right now. I'll get that in a second. Having a low supply, good reasons to hold a token, and high user growth creates an explosion of token price. High supply, not many reasons, and low user growth creates just what we just talked about. Okay, skip all this stuff. Comes down to 4 things. Adoption, user growth, upcoming token efficiency, if whatever it is right now, and potential risks. So, real big quick thing. The earlier you are on the project, the larger the potential value. Makes sense, right? That's what everybody who got in the ICOs in 2017, that's why they're all filthy rich, jerks. Good for you. And this is what it all comes down to. Let's see some examples. Celsius Network and Voyager Digital. 2 great examples if I could ever think of one myself. So they are 2 up-and-coming companies with huge potential for investors. Here's the 4 parts. 1, they both are on the low end of the adoption curve of a big shift to digital currencies. Celsius has a 1-year advantage to Voyager. So we're talking about the adoption curve of the project. So if you think about Celsius, if you know anybody in cryptocurrency, they all know Binance, most. And everybody in America, they all know Coinbase. When you talk about Celsius, like, what is that? Not everybody knows. And it's amazing how much that price has gone up. And Voyager, it's even more so. So I don't understand why people know so much about Coinbase and I don't know about Voyager. I guess I'm just not doing, my part here to educate people. So got to get better at that. Second one, and this we're talking about user growth projections. Celsius ended 2020 with 100,000 active users. The more users you have, the more your price goes up. And Voyager had 50,000. Not too bad. They're both growing at 20% month over month, likely accelerating the first part of 2021. That's going to play a factor in a little bit. And then this is called token efficiency. Both companies to 40,000 users, Celsius had a token efficiency of roughly 30%. With an R2 of 70%, Voyager had a token efficiency of 25%, and an R2 of 67%. Pretty similar, even though one is a security token and one is a utility token. So let me break this down. So first of all, Celsius is a security token. It is a registered security with the SEC. You can go look at their website. I did a video about this. It's a fact. And the other one, Voyager, is classified as a utility token right now. Who knows what could happen in the future? That is what it is right here. So as far as token efficiency, it's token utility plus token supply. And if that sounds confusing, well, I talked to Pat. And I asked him this question, I'm like, Pat, what the heck is this? And he says, okay, efficiency is made up of two parts, token utility and token supply, which we just talked about, right? It makes a lot of sense. Token utility, what does it do? Token supply, how much you got? And token utility is the incentives for customers to hold the token to receive benefits. And the token supply is the max token circulating. R2, linear regression, allows us to know the correlation of how predictive the token efficiency is to price. R2 or R squared represents the correlation mathematically. Anything over 50 is correlated. Below 90% is extreme, or above 90% is extremely correlated. Celsius was 92%, which means it's highly predictive of sell price. That made my head hurt. But if you're really into that stuff, I'll link Pat's article there. And the only other part here is, I asked him, I go, okay, I was really trying to hang in there with him. I said, hey, so if token efficiency is the slope of the relationship between user growth and token price, is it just a math problem, like 40K divided by price, or is it plotted with the graph? And he says, sure thing, it's algebra. It's 0.0003 times Metcalfe's law of users plus intercept or 0.40417. The intercept changes after 40K for sell. As it accelerated, the slope became steeper to 0.0008. I was like, great. I don't know what the hell you just said. So you don't have to know all that stuff, right? Pat's a great guy, smart guy. Just know this. Your token, the whole, it just has to be the utility itself and how much it actually has. That's the token efficiency, essentially in a nutshell. That's the big thing. All right, so let me jump back here again. Oof, tough stuff. Okay, and then he does some plotting and just says, this is, Celsius hit critical mass and had enough constrained supply by token holders. That's efficiency went much higher to 80% and an R2 of 95%. Again, math, great. Math is hard. Voyager has an upcoming announcement of their loyalty program that, depending on the utility, has the potential to do the same. So the supply of Celsius, it's got about 695 million total supply. Celsius, 695 million. That's a lot. That's a good amount. Voyager has a supply of 222 million, moving to 300 million. So if you have followed the channel, you know how bullish I am on Celsius and how it went from next to nothing and it went exponentially higher. We were seeing above $6, and I remember doing videos like, wow, Celsius is going to go above $1. Wow, it's going to go over $2. Wow, it's going to go over $5. Wow, here we are at $6. And now it's been fluctuating a little bit, but that's 695 million. Here's Voyager with a max of 300 million. So just think about that. And then as far as like utility, Celsius, the same type of thing. It's got a great utility. The more you have, the more rewards you get. That is those type of thing. You can't stake it, but that's one of those deals. It's got other functions as well. And then Voyager, with this new loyalty program, you're going to be allowed to stake that at 7%. So again, utility and how circulating supply. And then lastly, you need to look at risks. Celsius and Voyager both have risks. Given the potential for regulation, clarity of crypto, as an investor, it's critical to look at the leadership teams, the steps taken by the companies to be regulatory compliant, and how they treat their customers. And this was the thing that when I talked to Steve about it, and we're on the same wavelength, it's very simple. Just give people exactly what they want and make them happy, and they will come back to you and they will be loyal customers for a very long time. And then I just don't see how hard that is. It's just do the right things, listen to your customers, and just give them what they want. That's exactly what Steve does, and the CEO of Voyager. So I think if you're looking at how you treat customers, 𝗙𝗥𝗘𝗘 𝗧𝗥𝗔𝗜𝗡 has the same type of philosophy. The guy's great. He's doing AMA all the time. He's answering questions. He's a CEO. He's always out there, and that's why that company will be great. Same with Charles Hoskinson from Cardano and ADA. This is why I invest. I invest in people, and if you got leaders like that, I mean, how can you go wrong? So that is where we are with that. And then I'll finish up with this. So this is the investors' new guidelines or investors' slideshow that's given out to potential investors into Voyager. And just so you know, you got good interests, 20 coins. I mean, that's all the stuff I talk about. It doesn't matter. Good market opportunity. I think we all know that. No. This one right here. Their path to 20 billion assets under management. Because you would, like I talked about Voyager, but I mean, you know how much assets under management it has? And it's done pretty well for their token. It's not that much. Right now, in 2025, they expect to be at 20 billion assets under management. You know what they have right now? 350 million. This was an announcement just came out 2 days ago. Voyager Digital announces January growth, AUM, 350 million, which is up 52% from the year end. So from December 31st to January 11th, it went up 52%. It's pretty good. It's not too shabby, right? And this is the big updates. Average daily net deposits exceeds 5 million, up from 1 million, so they've 5x'd. Average daily new funded accounts have grown 4x. Value traded, 4x. Traded velocity, 1.25 to 1.5. Trading spreads to date above 50 base points. But there's another thing here. Where'd it go? This, right here. This is the interesting part. And if you don't listen to anything else, just listen to this part right here. Customer account growth of 4x versus December. 4x. Isn't that interesting? Because when we were taking a look at the price, 400%, 4x. Why? A lot of users, a lot of growth. A lot of users, price goes up. Metcalfe's law, here we are. Not much supply, ton of utility. To me, this only makes sense. This only makes sense of where everything is going. And now, right now, I'll just tell you right now, it's fluctuating at 72 cents, but pretty good. I mean, look, it was at 284 just a couple weeks ago. Now here we are. So it's looking pretty good. And then when I did this, I had a price prediction of $30. Now, everything else in my price predictions was pretty tame, honestly. I mean, I have Bitcoin at 150K. That's pretty much in line with most everybody on the lower end. And I'm just a reserve person. What are you going to do? And then what are you going to do? Ethereum, I think it's going to be 10K, 5 to 10K. Chainlink, I could see at 35, and then everything else. But then it was all pretty good. Celsius I had at 20 bucks. People have it much, much higher. And the only one that I had that was really earth-shattering or eye-opening, or what you want to call it, where people were like, the guy's lost his mind, was Voyager, where it was at 29 cents at the point, which I just did this math 5 days ago, 4 days ago, 5 days ago. And it was at 29 cents, 29 cents. Then it went to 86 cents. And I said it's going to be 30 bucks. They were like, that's crazy, that's dumb. Well, potentially, but this is what Pat's got. Pat, looking at the same type of thing, the guy that we just talked about in the article. Depending on the token efficiency, you're looking between $10 and how many people come in, all the way up to 70 bucks. That's what we got. So that is the big stuff. And then one more thing before we go. The stock for Voyager, just so you know, over the last day, hanging around between $5 and $6. This is the stock now. This is the stock, because there's a lot of ways to get into this thing. So if you're looking at a 5-day, not too bad. Take a look at the 1 month. Okay, what the heck happened here? What was it, $1.87? Now it's at $6 in the stock market. Let's take a look at the last 6 months. You were at less than $1, now you're at 6. And then let's look at a year. 20 cents up to $6. So if you're looking at a project to get into, I can't give you financial advice. I'm not a financial advisor, not a financial planner, but this is one of those things that I would definitely do. Also, if you're looking for a place to actually buy stock, I have a link for Webull because I couldn't buy it on the app that I have, which is Robinhood. Robinhood doesn't have it, but Webull does. And then also, if you use the link, you get like something crazy. Account open bonus, you get 2 free stocks worth between like $2 to $250. And if you make a deposit of $100, you get stock between $800 and $1,600. They do it on a random allocation type of thing. So that is it. I know that was a little bit long, but I thought it was important to really bring out to you exactly why I'm doing the things that I do. And kind of like the price predictions, it's not like I'm just like, magic hats, numbers, here it is. There's a lot of things that go into it, and even all the things that we talk about, I still could be way wrong. Just so you know, I mean, I'm going to put a lot of capital into Voyager, but that is just for me. It's up to you to decide and look at this information. There is 4 tokens I dollar cost average still every day. That is Ethereum, Cardano, Celsius, even though fees are sucking, and Voyager. I think Voyager is my big play, but what are you going to do? All right, so that's it. So thanks again for watching the whole thing. I really appreciate it. If you like these types of videos, in 2 months, it's going to pop up on your left and right, let you do the magic, and that is all. So thanks for sticking with me. I appreciate it, and I'll see you on the next one.